Hello, I hope everyone is having a fantastic day. I'm Allie. I'm the marketing assistant here at Health Advantage Credit Union. Today, we're going to be learning about credit and how you can maintain and repair your credit score. So to get started, we'll begin with what is a credit score? A credit score is a 3-digit numeric summary that's going to tell lenders about your creditworthiness. It is formulated to predict your credit risk, which is the risk you will pay back what you borrow. FICO scores are the most common credit score model used by about 90% of lenders. A FICO score is going to range anywhere from 300 points, being considered very poor, to 850 points, which is considered exceptional. The most common type of credit references is a credit report from one of the 3 major credit bureaus, TransUnion, Equifax, and Experian. Your credit report includes information about your past and existing credit accounts. Credit reports outline how much you owe, how long you've been using credit, and whether you consistently make on-time payments or not. It's very important that you maintain a good credit score for a variety of reasons. A good credit score can earn you a lot of advantages in life, like lower interest rates on lines of credit and loans like auto and home loans, better insurance rates, lower security deposits on rentals, cell phone services, and utilities, and it can even give you a stronger job application with employers who run credit checks. So overall, those who have a higher credit score are more easily granted credit and receive better interest rates. When learning about your credit score, it's important to know your rights to your credit report so you know when and if something should be removed or fixed. You have the right to access your report one time each year from all 3 of the bureaus for free without it affecting your credit score at all. If you discover an inaccuracy on your report, you may file a dispute, and they're going to be required to investigate the dispute to see if that item should be removed or if it should stay on your report. You have the right to have any negative information removed. It might not be removed right away, but all negative information will eventually age off. It may take a matter of years depending on the remark, but all negative information is eventually removed from your report. And then lastly, you have the right to privacy. So only those with a need that is recognized by the FCRA may access your report. Usually creditors, insurance, landlords, or other business employers must have written consent from you in order to access your report. Here I've included an example of a credit report from Experian. Experian is one of the 3 major credit bureaus. So to go over it, starting from the top of the report, the first section is going to be the report number. This is a number you're going to need if you were to contact the reporting bureau regarding your credit report. They'd be able to look it up by this number and be able to see what you're seeing. Section 2 is the index. This is where you can click through to navigate the various sections of your credit report if you're reviewing it online. Moving on to the third section, this is where any potentially negative items can be found. These are items creditors may view less favorably. Section 4 is going to be your current account status for each of your credit accounts that you have open. And then section 5 is going to be where you can find accounts that are in good standing. So an account is in good standing are going to be items that creditors may view more favorably. It's important to note that certain accounts may not report to certain agencies, so you might not see all of your credit accounts listed on one report. So just keep in mind that if you don't see an important account, that they may not just report to that agency. Section 6 is the type of account. So there are 2 types of accounts, one being revolving and the other one being installment. Section 7 is any requests for credit history. The requests for credit history are called inquiries, and there are 2 different types of inquiries. There's an inquiry being one in which you initiated, this being applications for credit cards, loans, insurance, housing, and then those that may not have been initiated by you but are allowed by the FCRA, including things like pre-approvals, employment checks, and reports requested by you for you. These types of inquiries have no impact on your creditworthiness or your credit score, so it's not going to affect your score. Section 8 is personal information that is associated with your history. In this section, Variations of your name may be included, social security number, employers you've worked for, telephone numbers, or any other personal information that's out there about you could be found here in the report. Section 9 is going to include your address information, listing your current and any previous addresses that you've lived. And then lastly, Section 10 of your Experian credit report is a place where you can put a personal statement. You're able to add a personal statement to your report, and it will stay there for 2 years. It's important to know that anyone that does have permission to access your report will be able to see this personal statement. So now that we have a basic understanding of what a credit score is and have taken a closer look at a credit report, it's important to know exactly what makes up your credit score. So there are 5 components of your credit score. 35% of your credit score is composed of payment history. 30% is your current total debt. 15% is the length of credit. 10% is any new credit. And then the other 10% is types of credit, being revolving, fixed, credit cards. As important as it is to know what your credit score is composed of and how much it affects your score, it's also important to be aware of what does not affect your credit score. So your balance in your checking and savings account does not affect your credit score, no matter how much or how little of a balance that you carry in them. Your employment history, income being how much you make, these do not affect your credit score. Marriage does not affect your credit score. However, if you were to get a joint loan or credit card together as partners, then it would affect your credit score, but simply getting married does not. Good payment history on recurring bills like utilities, this doesn't quite affect your credit score. As mentioned before, having good payment history does compose 35% of your credit score. So it is always important to make sure that you are paying your recurring bills like utilities on time. However, most of these companies don't report to the agencies, so it's not going to affect your credit score if you miss a payment. But your credit score will be affected if you do not pay your bills, and then they're sent on to a collections agency, because the collection agency does report to the credit agencies. So that is when not paying your recurring bills like utilities would have an impact on your credit score. So why is it important to build good credit? Credit plays a vital role in your entire financial life. Most people think of good credit for obvious reasons like getting a credit card, a car loan, or a mortgage, but credit can play a role in less obvious situations like renting a car, an apartment, home, even getting approved for a cell phone contract, and perhaps even getting a job. When applying for a loan or lease, the lender wants to see a credit reference to see if you're able to responsibly manage the money that they lend you by paying them back on time. Some employers even check credit references, especially when the job you're applying for involves handling money or dealing with confidential financial information. So how do we build credit from scratch? Establishing credit is the first step into maintaining your credit score. It can be difficult to qualify for credit if you not only have a history of payment problems, but if you're applying for credit for the very first time. Building credit can be tricky. If you don't have a good credit history, it's hard to get a loan, credit card, or even an apartment. So if you're new and need to establish credit from scratch, there are a few things that you can do. First, you're going to need to start with opening a credit account. This is the first step in building your credit. You may have to start with a secured credit card or credit builder loan. The very first time that you apply for this credit, the lender will order a credit report, and then this first inquiry establishes your credit report. When building credit from scratch, it's important that you are paying everything on time. This includes everything from your credit cards and loans to rent payments, utilities, and cell phone plans. Even accounts that aren't normally reported to a credit bureau can negatively impact your credit score, like I stated before, if they're referred to a collection agency. Make sure when you're building your credit that you're applying for new credit cautiously. When you apply for new credit, the lender will check your credit report, resulting in a hard inquiry. A hard inquiry brings down your credit score, especially if you open several new lines of credit within a short time frame. And then also make sure you're monitoring your credit. Get in the habit of checking your credit report regularly, analyze it for inaccurate information, and dispute any incorrect information with the credit reporting agency immediately, so that way it doesn't affect your score if it doesn't need to be. Building credit is more of a marathon than a sprint. It simply just takes time. In fact, credit scoring company FICO requires someone to have at least 6 months of credit history before they will even calculate their score. One's proven ability to manage money and meet financial obligations is the basis of a credit score. The best way to build a strong credit score is to make a habit of always paying bills on time in full each month. The number one goal to building a strong credit score is to build a long history of reliable bill paying behavior. So while we've covered the general rules for how to build credit, let's get into some more specific tools you can use to build it. The first step in building credit is to apply for your first credit account. For many, their first credit application is for a credit card. But without credit history, you may not qualify for one of the major credit card issuers such as Visa or MasterCard on your own. The good news is there are other ways to start building a responsible credit history without a credit card. So here I've included 7 alternatives to traditional unsecured credit cards. You could start with a store card, such as a credit card you would get from Target, TJ Maxx, JCPenney's possibly. It's when you're in the checkout lane and they're asking if you want to apply for their store credit card. Sometimes this can be a good starter for those that are just starting to build their credit. However, you need to make sure that you are managing it responsibly. You can start with a secured card, a credit builder loan. Here at Health Advantage, we offer credit builder loans to help you establish or help rebuild your credit score, all while building your savings account at the same time. Certificates of deposit is an insured loan, student loans, if you're a cosigner on a loan, or an authorized user. So how long does it take to build credit? There is no one answer. It depends on a number of individual factors, including the types of credit you're using, the balances owed, and the credit scoring model that's in place. Experience says it can take 3 to 6 months of activity before a credit score can be calculated. Once you have a score, it can fluctuate often. TransUnion says your creditors will likely report to the credit bureaus every 30 to 40 days. So every month you'll see your credit score that it can go up or down depending on how well you're managing your credit. So now that we've covered the basis of what a credit score is, what it's composed of, and what does not affect it, we'll touch on ways to maintain your credit. These main points will help you keep your credit score in good standing. So first, like stated before, make sure you are paying on time every time. This is a key role into maintaining a good credit score. Payment history makes up 35% of your score, so a commitment to never make a payment late, again, is the most powerful steps that you can take to demonstrate responsible use of your credit. Paying down existing debt decreases your current debt, which makes up 30% of your credit score. So simply paying on time and paying down existing debt creates 65% of what your credit score is composed of. If you're able to manage these 2 key components without the need for additional credit, your credit score should be in pretty good standing. Note that even if you never miss a payment, if you have a lot of debt, it can look to a lender like you are overextended. So as I mentioned, managing to make payments on time and decreasing debt without the need for additional credit is crucial. If you're looking to maintain your credit score and watch it increase, it is important to not take on additional debt. When you take on additional debt, you're not only increasing your existing debt, but you will receive a hard inquiry on your credit report. Too many of these can be a factor of a lower credit score. Creditors need to see that you can pay your bills on time without the need for additional funds to do so. If you have any collections accounts, it's important that you get those settled as soon as possible. Keep old accounts open. The length of your credit composes 15% of your credit score. So if you close your oldest standing account, you are then shortening the length of your credit history. Make sure you avoid access credit applications. If you apply for credit too many times, especially within a short period of time, it could look to a lender like you're desperate for money and that you rely on the credit in order to pay your bills. Know what goes into a good credit score. The more that you know about what goes into your credit score, the easier it's going to be to maintain a good one. So when it comes to rebuilding credit, how long does it take? Rebuilding a damaged credit score can be tougher than starting with a blank slate, but it is possible. So the first step is to check your credit report to see exactly where you need to improve. If you're trying to rebuild after bankruptcy, you should look into applying for a secure credit card or credit builder loan to help you start rebuilding. Bankruptcy can stay on your credit report for 7 to 10 years, but you can see an improvement in your credit much sooner. Put in the work to rebuild your score and keep in mind the 5 components that go into your credit score calculation. If your issue is missed payments or late payments, work on bringing your credit accounts up to date and set up reminders so you pay your bills on time going forward. If your credit utilization ratio, which is your current amount of debt, is too high, create a plan to pay down your debt and get your credit utilization rate down to 30% or less. Whether you're new to credit or trying to undo the damage caused by past credit mistakes, building credit takes time. So overall, don't charge more than you can afford to repay. Keep your balances low on your credit accounts, especially credit cards, and set up reminders to pay your bills on time. These actions show you know how to use credit properly, and you'll be rewarded with a stronger credit score in the end. What you should know about credit repair is that you should always try to repair your credit on your own first or seek guidance from one of our credit union experts. There are a lot of credit repair companies out there that claim they can help, but it is important to acknowledge that credit repair companies are businesses looking to make a profit. So individuals looking into their credit for the first time may notice an abundance of repair companies looking to swoop in on a new customer. While their messaging may suggest they're interested in bettering your score, repair companies often position themselves to target consumers who have very little knowledge of how credit works, so they can make the unsuspecting customer pay for services that they could easily do themselves for free. These companies regularly ask for payment upfront and are unable to follow through on fixing your credit. More often than not, it is best to repair your credit on your own. While this can be a laborsome process, over time, the reward of a growing credit score and the knowledge of your own financial history can really pay off. The most heavily weighted factor and the most common credit score calculators is your payment history. So if you've missed payments on a loan, credit card balance, or some other recurring expenses, FICO and other credit companies are going to pick up on them. The most immediate action you can take to repair your credit is to make your payments each month. In many cases, payment history will show on your credit report for up to 7 years. As you continue to miss payments, your credit score will dip. But because these payments survive for so long on your report, the newer the payment, or lack thereof, the more it affects your current score. So while the process of repairing your credit, it is best to refrain from creating any extra avenues of credit. Opening new credit cards and taking out additional loans is going to lessen your ability to organize your payments. These behaviors can make you look more vulnerable to lenders. And it's also important to keep in mind that even if you're just shopping for a new car loan or a mortgage, this can alter your credit score, even if you don't end up following through with those specific loans. Don't give up on your failing credit score. Remember that consistency is key and that most missed payments will eventually be removed from your report. Commit to working on your credit by yourself, for yourself first, and make all of your monthly payments on time while managing what existing debt you currently have. If you must use a credit repair company, be sure to do your research, because while some companies do want to help you fix your credit, others simply want to reel you in and take your money. The best way to repair your credit score is to sit down and study your credit history. Be patient, diligent, and watch your credit score rise. So I want to thank you for taking the time to learn a little bit more about how to build and maintain credit with me. I hope you have a fantastic day and found this webinar helpful. Thank you.